Hey guys, it's Jared here with today's daily recap. I had a terrible day. I've actually had a couple in a row. I haven't traded the past couple days because of busy doing appraising stuff, but I have the past couple days I have traded have been red. I'd be lying if my confidence isn't shaken a little bit, but I recognize what I'm doing, and it's just flat out I'm ignoring the volume price analysis. I'm not focusing enough on the what the volume is telling me. And a couple times I caught myself being aware of that fact and still taking the trade anyway. And so it's kind of just become a discipline issue right now, which is a lot of day trading. My first trade was on PLTR. So let me show you what I mean here. So this one's not a neglect of what I like to see in volume when I took the trade. So we had seen a lot of bearish volume, a little bit lesser bullish volume, followed by upticks in bearish volume here. We were below this moving average. So, you know, nothing too bad there. The reason this is a bad trade is because just we threw back-to-back hammers off of a very specific price point, which is the $26 mark, you know, and then we got decent bull volume. When I took it though, the volume wasn't the issue. It's more throwing back-to-back hammers on the volume that we had. That should have been a red flag and made me think twice. Also, if I was going to take this short, I really should have got closer to this 200 MA. So this was like, I needed to get a better entry if I was going to take it short anyway. Obviously this was a long, so this was just a poor trade by me. My next trade was NKLA. This is actually my only winner of the day. Took it short here, and what you can see is we broke down, you know, we hit this level, we came back up on lesser volume, although it was closer than I like to see. I really like to see the pullback be on like half as much volume as the candles before it. So it was a little bit more volume on the pullback than I would like to see. So again, a little bit neglecting that. But I took it short here close to previous day close and around the $17 mark. And I held on. I was very patient. I got a partial there. It kind of messed around for a while. But then you start to see the bearish volume uptick here. So that all looked good to hang on, even though it was a little bit nerve-wracking. It dropped. I got a really good partial here. And when it started rising on so little bullish volume, meaning you're not getting any more people coming short, I really should have taken another partial on the way up. But I was trying to be patient in the hopes that we might get down, which, you know, it was a wish and a hope, but that we might get down to 16.37 or the $16 mark from the daily level. So I was really trying to maintain a lot of my position, but a wish and a prayer, it came back and got me out of break even. So this is a good trade, but when you see it, when you see a bullish engulfing crack on such low volume, I mean, the pattern's over. So right after this, right after it gets past the previous candle right here on a bullish engulfing crack, I should have gone out here. I could have put an extra, you know, 10-15% into my pocket from that trade. But again, I didn't. Poor trade management there. DKNG was, you know, again, I was right on. I took it short here for a breakdown, you know, because on the 5-minute chart we had the 200 MA, we had the $53 mark here, and I like the pattern it was forming. It's kind of forming a descending triangle on the 5-minute there. But again, look at the volume. So we had some bearish volume uptick here to this point, which was an important level. Then we pulled back off of it, and I saw this huge bullish volume, and I still went short. My style of trading, you don't do this. I don't go short right after, you know, that uptick in bullish volume, especially after you throw a hammer on high volume right here. Now again, right here, you throw this, you hit an important level, you see an indecision candle, bullish volume comes in, then you see another, you get more bullish volume, you know, maybe right here is my entry. This is about 53.50. I like that number. So, you know, right there should have been my entry. I had confirmation. I could see the trickle start to back down, and then we were forming a bearish boot right there. So my entry needed to be right here. And I could have got to $53, so, you know, could have made 50 cents there, but I mismanaged it, and so I couldn't survive this pullback. What else? Well, let's go to RAD. RAD tore me up. So I don't catch a lot of reversals, but for some reason I wanted to catch this one. Probably bad psychology at this point, but we see it's been pushing up all day. It's kind of tinkering around, messing around here. I saw this volume and it kind of misled me, or it's what got me interested in taking it short. Where I realized I was wrong is you see it hammered again off the same level, saying like, all right, maybe it's not done. Then you see I took it short here, and then I'm just seeing bullish volume come in. So this was another bad trade. And then because I'd already hit max loss for the day, actually a little over max loss for the day. I wanted to take it short here at 22, but I didn't want to get shaken up again. So I didn't have the courage, and I was trying to teach myself a little bit of discipline after not being very disciplined today. So I resisted the temptation, although this would have been a great trade. So and that's what happens when you have bad psychology. You miss good trade opportunities, you take bad trade opportunities. It's this whole thing. So terrible day. Basically, to put it simply, the market was a little choppy. My watch list confused me a bit. I didn't get a good read on any of the tickers, but what was the biggest thing was purely my fault, which is just sometimes I recognize that the volume price analysis was not what I usually want to take a trade, but I couldn't resist. And I got to get my discipline back in order, and when I do that, the green days will come.